Bitcoin has most recently broken down from its upward trend line. As you can kind of see here, guys, we were tracking an upward trend from the low that we had at the $40,555. We tested this at $41,811. It was good support, and we found this to be continuing upwards up towards our most recent highs, actually just around and just short of $44,283. Since we broke the trend line, we've returned this previous support trend line to the upside into a resistance line. As you can kind of see, it's been tested here a couple of times, and most recently with our new yearly high coming in up here at $44,398. And so as we can see price being rejected from this area right now, let me just go ahead and tidy out some of these areas. We don't need these on here. You can see that it's fighting the 50 EMA and the 50 SMA, right? And so at the moment, price has closed on this hourly chart below the 50 SMA. That was set at $43,667. Right now, it's closed above the 50 EMA at $43,576, and that's really where the battle is. You can see there's a little bit of green at the point of recording this video here, trying to turn, or the bulls are trying to turn that 50 EMA into support. Now, if they can do this, then we can continue this run to the upside a little bit further, where we probably will be testing and maybe even breaching 44,700. Something that I did not think was going to happen, but I can see here something that potentially could. And obviously, we'll still look to this trend line being a resistance trend line, even though we go up and set a new yearly high. Okay, and so what we want to do is we want to kind of see how we kind of potentially cross that border with 44,700. If we do close below the 50 EMA at $43,578, then I expect us to move down more towards the 200 EMA, which has historically also been good areas of support. If we do come down to the 200 EMA, that's $42,800. That's where I'm likely to think of the next level of support. We might find that this move to the upside is really where we kind of push up towards the previous all-time or previous yearly high at 44,700 for the double top scenario, maybe piercing just up a little bit further towards 45k before we come on down. But we are getting to a point where momentum isn't really supporting these moves to the upside. And I've kind of spoken about this a fair few times, with Bitcoin basically being waiting for its second capitulation. I'm probably going to put together a video at some point later in probably over the next kind of couple of days, talking about long-term holders and what they're up to. And I don't just mean the wallet counts that I kind of spoke about in yesterday or last night's video. I am talking more about what their behaviors are doing, and you can kind of track that through other metrics and other indicators, and there's some interesting stuff with that, so watch out for that one. But as we come back down into our charts here, we can see that Bitcoin finding support here could basically take us up into a new yearly high. Lose it, we come down more towards $42,800. Momentum wise, taking a look at the stochastics here, we are coming down towards the oversold area. As you can kind of see, it is oversold just about. This is not to say that we can continue dropping. We can rally from here. I mean, we could. It'd be very unusual, though, considering the distance between this white line and this yellow line. Normally, you start to see price reversing when you get the crosses, and you can kind of see the cross occurring. So I think we're a few hours away from that. So probably by the time this video goes live, we should start to see some kind of progression back upwards if it isn't already happening. So that's your stochastic RSI. If we throw in the divergence indicator here, we can see that we did have bearish divergence here. This happened at 1 a.m. UTC. Let's go ahead and take a look at that. You can kind of see here, we actually do see a bearish divergence as we kind of push up towards that 44,398 right here. And then, of course, we start to see this move to the downside. But just before that, we did have hidden bullish divergence before we had that bearish divergence. Interestingly enough, price has moved quite nicely and is adhering to the divergence indicator on the 1 hour time frame. So it's really interesting to kind of keep a close eye on that one if you do not all do so already. Now, as you can see, there is a real appetite for selling versus buying right now. Okay, so when we take a look at those volume profiles, we can see that there's a significant more in the amount of selling volume than there is in the buying volume. So we know that the momentum, although is shifted back down towards oversold, isn't exactly supporting the idea that we are going to be, rallying up significantly, 50,000, 60,000 new all-time highs, that kind of stuff. I'm not seeing that kind of supportive data. What I am seeing, though, is basically corrective patterns, lots of overlap continuations and things like this that ultimately will, in my opinion, lead us down a little bit deeper in price. So as in, we have to have nice healthy corrections. Again, coming back to talking about capitulation and the video that's going to come out probably, if I can get around to it, tomorrow or on Sunday. So do watch out for those. Christmas Eve, maybe it'll be a good video for Christmas Eve. So do watch out for that. As capitulation is something that I think a lot of retail investors, they don't really appreciate. So that's your hourly chart. Really, really interesting stuff. Now, as we kind of bring this up into our daily time frame, let me just clear that out. You can see again, so we were talking not that long ago about really tapping into this higher range between the 42,401 and 44,146. Now we have obviously pushed up higher here, not closed outside of this range, but we have got those wicks on the daily time frame really kind of coming in here. Now, for this, I'm going to kind of put out there and say that there's some real interesting zones right here from our current area. So lots of resistance right in that kind of 43,861 to 44,398. But we could probably extend that up towards 44,700. Ultimately, there's a lot of selling pressure right up in this range here, and it's basically suppressing the price action. Our daily stochastic RSI is actually progressing out of that oversold area, and so this actually puts Bitcoin in a bit of a dangerous position for a significant pull to the downside, not to the upside. I know it doesn't necessarily align to what a lot of people are going to be telling you right now, but ultimately, from my point of view here, you're not really getting the support that you need to rally up Bitcoin to those higher levels. In fact, you're seeing a lot of weakness in this area, and ultimately, I think what we're going to be seeing here is a bit of a pull to the downside. Something that I was kind of hinting at in yesterday's title, which was you should be fearful when others are greedy. The market right now is incredibly greedy, and that generally leads to profits being taken from smarter and more savvy based investors. So on our daily chart, we can see that we are really hitting those areas of resistance. Support at the moment, I do think, is going to be coming down here at the $39,600 to $40,000 level, with the 50 SMA and the 50 EMA basically being down there at the 39,200 to 39,300. Those are the two lines that you see here, the yellow being the 50 SMA and the red being the 50 EMA. Underneath there, we do actually have this really interesting zone. This actually comes in at 35,735 to 37,653. This is a fair value gap through smart money concepts. So should we lose the 50 EMAs and the 50 SMAs as support, this is going to be an interesting zone to kind of get filled out and maybe find a little bit of consolidation on. This particular range is an indication of where liquidity was missing in the price action, and ultimately price likes to go back down and put liquidity where liquidity was not. Essentially, some kind of psychology that sits behind this is that the markets like to kind of go back, or people like to trade the price back into ranges where liquidity was missing previously. And so what we tend to find is price wants to gravitate down there. Now, it's not a guarantee, but in this particular case for Bitcoin, I am very confident that we are likely to see this get filled out over time. Underneath there, we have the 200 EMA coming in at 32,500 and another fair value gap sat at 30,000 to 32,000. So as you can kind of see on the daily chart, we're looking pretty interesting. As I was indicating earlier, the stochastic is obviously progressing upwards from its oversold area. This is not necessarily a good sign. Let's throw on the divergence indicator. We can see here that we did have a hidden bullish divergence on the 17th of December, and we have seen obviously a bit of a push to the upside on the back of that. This again was coming from those swing lows that we were seeing and this new progression to the upside. The one previous to this was obviously the swing low low. And so ultimately, looking at it, it looks very corrective in the way that it's moved, and it's right inside its range. And we are looking to bring this pattern down a little bit deeper, more towards those 50 EMA, 50 SMA scenarios, in my humble opinion. Volume at the moment, obviously, as you can kind of see, it has been very sporadic. If I pull this back, sorry, you can really see the difference in volumes here, right? The beginning of the year was really strong volume, and realistically, we haven't got a significant amount of volume to really understand why price has moved the way that it has done. I've kind of spoken about this a couple of times, where my opinion is that it's not really an opinion. You can kind of actually take a look at the on-chain analytics, but my thoughts on this are very much that we see a decrease of Bitcoin on the exchanges, although inflows have started to increase a little bit. We've seen a lot of Bitcoin flowing away from the exchanges. This essentially has meant that the demand for Bitcoin, although low, is still outpacing that of the supply that is available for purchase, and thus price pushes upwards. You can argue a manipulation, you can argue all these different things, but ultimately the logic is still there. Price is only going to be moved by imbalances of the supply and the demand. And if the demand is low, as indicated in our volume data here, then the only other reasonable, rational understanding here is that the supply has to shrink. Checking the inflows and the outflows of Bitcoin on the exchanges, you can see a significant amount of outflows for BTC over the year. And well, we can see that there's a positive impact on price with regards to that. So volumes are low. Most recently, if we zoom in on this, you can see volumes have been decreasing since the 24th of October. There's the occasional spike in here, but ultimately nothing too much going on from that point of view. So volumes are cool. They're pretty good in terms of understanding, why price is moving the way that it is. Momentum isn't there, and we are looking for pulls to the downside. Roll this up into our weekly time frame, and here you can see the parallel channel that we found ourselves in, right, testing the higher highs and the higher lows. Of which, guys, I've kind of dubbed this one of the biggest bull traps in Bitcoin history a couple of months ago, and I still kind of align to that. Although I think the bottom is more than likely in outside of a big, massive black swan event, it's unlikely that we're going to drop down lower than that. The expectation will be a significant retracement and breakdown from this parallel channel. Okay, we have to break down from this particular structure or this particular pattern, in my opinion. I do not expect us to kind of just bounce from the low side. It's possible, of course, that we just come down, we tap into that low range at 30k, and then we break out of the parallel channel to the upside. It's possible for sure, but my expectations are that we do bounce at 30, we find rejection around the kind of 36, and then we break down from the channel, tapping into some of those lower ranges. And the only reason and rationale behind this is that we are looking for second capitulation, which I've been hinting at during the course of this video. Do watch out for it when I do drop that video. It's going to be super interesting. The kind of data points and the metrics that we're going to be looking at to kind of understand why a second capitulation is highly probable. And so when we look for that, we're going to be looking at a significant retracement. And I kind of spoken about this in a number of videos recently, where we are either going to be talking about kind of something like 40%, which brings us right down towards kind of 26, or you have those bigger corrections bringing you down to $20,000, about 53%. This isn't an unusual thing to be expecting within the price action of BTC. I know it's not what retail investors want to hear, but it's incredibly common, right? If we take a look at where we were back in June of 2019, the crash that we had down to November of 2019 was 53%. That was after a very strong and very significant rally for Bitcoin. Okay, probably more significant than we have had so far for BTC of 344%, right? A very significant surge to the upside is kind of always followed up by a significant correction to the downside, right? You don't just kind of go in one direction and one direction only. If you take a look at previous bullish markets from January 2015, we had a lot of really a lot of mini corrections rather than big corrections. Again, these were very substantial, 40%, 38%, 33%, 40% corrections, right? Whereas in 2021, we saw 20%, 16%, and 31%, but that was because we saw a 53% correction earlier on. In fact, it actually came down 72% if you include the pandemic. If you do exclude the pandemic, it's 53%. And so after a 72% reduction, yeah, you're not going to have lots of 40% corrections on the way to the upside. Instead, if you have a healthy correction of around 53%, I think you're going to see, probably more common corrections alongside what we saw previously, around 30 to 40% during the bullish market. And so when we come back to our current price action here, we start thinking about, okay, well, if we were to see a kind of 30% reduction, where does that put us? Well, that puts you at about $31,000. If you were to come and see a 40% reduction, that's going to put you about $26,000. And if you do see a 53% correction, then you are going to be talking about $20,000, right? These are all very reasonable expectations after seeing this particular pattern unfold here for BTC. And so for the price action of Bitcoin, I'm super excited to see the second capitulation. It's going to be a second coming for retail investors who have not yet been able to kind of enter the market or are just looking to extend their positions. Myself, I am about 65% in the market, and I'm quite happily dollar cost average on whatever pullback does occur here. And I think for the most part, that's going to be a massive opportunity. Again, there's going to be huge opportunities for retail investors to swing in and out of the market if they choose to do so. Again, I'm not a financial advisor. I cannot offer you financial advice. All I can do is share my thoughts and opinions on the data in the charts as I personally see it. I'm going to leave the video there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new, subscribe, and why not check out yesterday's video? I'll link that in at the card at the end here. Until the next one, have a fantastic day.